Here to help us trade them all is Quint Tatro. He is Chief Investment Officer at Jewel Financial. Let's start with Exxon Mobil and the possibility that it might buy Pioneer. The stock little moved on this news.
Yeah, Tyler, I like this a lot. I think we're going to see more of this in the space. I mean, you've got companies that are now in better financial position than they've ever been. Exxon, huge cash surplus, already returning a significant amount of that capital through dividends, shoring up their balance sheet. Pioneer in the same situation. So what better use of that capital than to expand their footprint? I mean, Pioneer, a huge player in the Permian. This gives them additional resources. I think it's a great play. I think investors, however, can get broad exposure instead of trying to pick the next target or invest in one of the behemoths and buy the XLE, the ETF, and just get broad blanket exposure to the whole group. I think we'll see more M&A activity here.
Yeah, especially if the acquirers are not going to trade down sharply, Quint. All right, let's move on then to Micron, which is up sharply, obviously, on news of this, what's happening with Samsung. What do you do with that stock?
Yeah, you keep accumulating the dips, Kelly. I got to give ourselves a little bit of credit here. We don't always get them right, but we were on talking about this name after their earnings announcement a few weeks ago where they actually missed and the stock went up. And the reason they went up is they talked about the cycle slowdown kind of coming near an end. And that was positive for the news. We said don't chase it, but look to accumulate on pullbacks. We got that pullback. Now we're getting a nice spark here. Ultimately, you're talking about a fundamental beast. This company has been seeing a compound annual growth in their return on equity of around 20%. That means they've been growing intrinsic value for 20% for the last several years, and the stock price has not reflected that yet. We suspect that's going to happen. Look for a breakout. You can put your technical hat on here over 65, and I think we'll get a little FOMO, and people will chase the name. I think you can still buy it here even on today's move.
All right, let's move on then to Charles Schwab, which has been beleaguered, tarred by the brush that has hit some of the mid-sized banks and so forth. What do you think of this one?
Tyler, this one hits close to home. We're a fiduciary advisor. We use them as a custodian. Their brokerage side is extremely strong. I don't see any challenges there. Their banking side, that might be a little concerning, and that clearly is why the stock is trading where it is. However, if you dig a little deeper and you can look at the bond action, and the bond prices are not reflecting the distress that we see in the equity side. So we think that this could be an overblown and an opportunity. That said, I think a lot of these banks that are undergoing this pressure, I think you don't have to sort of act in haste, and you can wait to see a little bit more clarity on what the FDIC and Treasury are going to do with the insured limits. But make no mistake, what Walt's doing and saying, I think, is smart. This is an area we would look to acquire if we got more clarity on the insured limits.
Let's talk a little bit more broadly about the markets right now and what your view of them is. They feel a little sort of tentative, maybe squishy today, little changed after Friday's jobs report.
Yeah, we're waiting on CPI and PPI, the inflation data, and obviously the FOMC minutes. But we see that there's a lot of fundamental strength out there. There's a lot of negativity baked in going into earnings season. And I don't think people are giving the respect of this recent up move that we've seen specifically in big cap tech. So we've been buyers in here. We continue to be long. We're not nearly as pessimistic as other folks out there. We think inflation is going to continue to show signs of a decline. And I think that's going to continue to put the Fed back off a little bit, and that will give further boost to equity prices.